Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap and look ahead. So we came in today, a little deja vu, right? Monday, futures is down 15 handles. Everyone was wondering would there be commitment to Friday's move, and basically the market just grinded higher to go green, and looked like everything was fine, in stride, constructive, etc., etc. And then today came in, futures down the same 15 handles, but at least we thought, they're not going to probably do the same thing twice. So if you did have some leftover longs, you had to think pretty fast to get out of the way. And now the question is, was the fledgling rally off, the lows of January 20th, is it over? At this point, I would be leaning that way, which I guess I am because I'm flat. And every little needle in me was saying to probably go home short, especially if you have a few days that, you look at the chart here of the SPX and you'll see that, what you don't like to see is, a breakout above a level to come right back to it. So this really has to hold, otherwise you get, one of these false breakouts. Today we came in and the market was off real quickly, and you had a little bit of time to see if you could, get out at around this 1915 or not. I know I was in the spiders, I was in the Russell, and after the first 15, 20 minutes I was out, and then I actually tried to flip short a few times, and then finally made some money as we broke the morning low. So at this point, you could almost draw a line like this, which we're hanging on, and at this point, this is very crucial. Are they going to just open it below it and break this ascending channel or the wedge? From here, it's just, this is a big spot. You have that, and then you have this 1870 underneath. So if you go and use your your Fibonacci's here, some would say that it's not the biggest deal in the world, that you only had a decent pullback from the lows to here. And that's pretty much the way it's been. So if you could read this, let's take a look here. The Fibonacci, it's only pulled back to 0.382% retracement from the low to pretty much the high. I didn't even draw this well. So, sometimes it tests to 50%, and recently, they'll go even further. So the question is, the speed of the move. If you held in here, chances are you were trending fast. By this happening, you let some shorts out, and now the question is, what's next? So, when I look at the landscape, what kind of got me out of the way and thinking short midway through the day was, you had the banks really weak. You had oil breaking 30. You had the Russell already giving back what it had on Friday. So like a lot of, technical broken or weaker signals. If FANG is turned into F, and I'll get into that in a second. And what does that mean for the bulls? That was a quick little joke. But lots of things to keep you risk down, taking trades, and very tactical. Some ask me if I ever put back the 50% that I put my wife on in her IRA, not IRA, 401k to cash. No. I still think that the lows of the year are not in, but again, we trade every day. So with that, look at the XLF real quick. Look there. XLF has already broken this little trend line from the lows. So question is, does it get back to here? You look at something like Goldman Sachs, what a weak stock. Tried to rally, boom. This is already back at the 2016 lows. I think right here over the weekend, Barron said it's time to buy the banks. Well, if you blindly buy what Barron says or what anyone says, this could happen. So just never do that. This was the spot to see if there was commitment, and now it's back at the lows, and you got to be careful. And Goldman Sachs has been very broken for a long time. Okay, we talked about this head and shoulders top pattern, left shoulder, head, right shoulder, broke the 200-day there, broke this, let's see which one is the macro neckline here. So it's got a ways to go, and it's just breaking some macro levels here, which no one is even really talking about really on TV, which is kind of weird. Today, Bank of America, thank goodness I got away from it. First of all, look at this, okay? Look at this resistance going sideways. Look at what happened when it broke the 200-day in the wedge, and then it broke major support going sideways and stayed underneath it. So very bearish. Look at the size of this channel. This channel from 18 to 14, wow, you kept 4 points off, and you're going a lot lower. But anyway, I tried it for a trade on Friday. It worked out on Friday. Had a little left over yesterday. I didn't like the action, got out of it, and now, this thing was down like 5% right back to these lows. below all the moving averages. So that's not really healthy if you're trying to figure out whether or not the banks are going to give you another move. You have to really love them and leave them in this environment. So anyway, not healthy. You had your stop here or you stop there. This little breakout above this level here, it should never have come back below if there was going to be any kind of commitment for higher prices. So you could try things, but you don't overstay your welcome. And here's the low, so we'll see what happens there. The IBBs, I think Guild is positive after hours. It too, just cascading lower. Here's when it broke this ascending channel here below the 200-day. Here's when it looked like it could play catch-up after this little wedge, but it broke to the downside. Now here you are back on the lows below the 8-day. This never even took back the 8-day, let alone the 21-day, so relatively weaker. IWM, also I had this long overnight thinking maybe there'd be a little bit of commitment to this oversold move, to the wedge, and looked fair. And then when it took out, I actually was selling a pre-market at like 101.30-ish, and then when it broke this 101.25, I was out. Is it still above this little level here? Yeah, but should that happen? No, not if it's going to continue higher. Now it's just a choppy mess. So let's get into the stocks. We talked about GOOGL, G-O-O-G-L, saying that if you're playing it for momentum, only play for momentum if it holds above, what did Red Dog say? Oh, 800. It tried, and then it failed. You go to Google. Now you have to be very careful here. Google tried to open and stay above a momentum level, which was right here, and it couldn't. So either you were playing it or after hours and you sold 840s or you sold 830s, or you were trying it today above 800, and once it broke, you had to get out of the way. Some guys probably even shorted when it broke there, and now it closed on the dead lows. So you'll see what's next. At this point, though, from the Red Dog reversal down here into the earnings highs, a little bit different this time. I guess here you could say it opened up and faded down but left a gap open and then started to go. So you'll see what happens tomorrow. You'll use this as your level, but be careful here. Finally, Facebook, the momentum broke a little bit. You have a bit of a Red Dog reversal topping tail. So hopefully that leads to a rest and maybe even a retest of the prior high here. That would be nice. A huge move, so extended. I know I sold mine yesterday. Some guys took a little pain and then kind of caught a nice little Red Dog reversal around this pivot. What was the pivot here? Pivot was 1572. You want to take a quick look for how that works. Think about it. It opened up red. If you were short versus yesterday's high, think about how you would want to cover, at 1572, because you never know how high it can go. But then if you're like, oh, it's going to go to 120, think about when it crossed below. So those are all reasons why the Red Dog reversal, in my opinion, is a great tactic, because you don't have to pick, a high, and take pain. So you look at this move here. Basically, you had, the prior high here. So what happened? You opened down, went to it, went above it, stayed above it. Shorts got scared, basically, and covered. People started to say, oh, Facebook's never going down. Then you had this little upper level break. This could have been sell signal number 1. And then it came back to the prior high, came below it, tried to bounce and couldn't. That was your maybe add to it, below the, that prior high of 1572, okay? And then you had a quick move down to below 114, which I then tweeted, said if you shorted it at 1572, maybe take some off here. That was $2 or so calculated. At some point, maybe some guys are even short a third, and then it had a little bit of a bounce. But all in all, nice tactic if you were looking for it. Now we'll see what happens here, if it could, go sideways and let the moving averages catch up. Some guys, we talked about in the morning call, what's going to happen with Amazon. It's in the penalty box. It missed earnings. Are they going to discount it? And so as long as it's below the earnings gap of 593, it's in jeopardy of breaking 570. It broke below 570, retested it, and then got crushed. So Amazon changed. Things change. Here was, this 570 level. So if you shorted it underneath there, congratulations. Now maybe you have a move to here, or you didn't take it overnight and you covered. But all in all, okay, this in the penalty box after earnings, and now you got to see how it handles the 200-day. Netflix was a decent trade yesterday. Opened up on a what's it called, an upgrade, and it was sold. That's not a positive environment. Okay, we talked about, will it get rejected in my morning note at 97, or will it reclaim it? Well, it got rejected there at the 8-day moving average. Now looks kind of bearish again. This thing breaks 90, it's in trouble. You then have 85 and change all the way down here. So hopefully, if you look to short things, you shorted into the upgrade because people wanted to take over by Apple, not an upgrade. But anyway, remember when this thing failed? This thing failed right here around 116. That's why I said, is this going to be a Netflix or is this going to be a Facebook? Well, not quite a Netflix yet on Google, but this failed at the momentum level, so did Google, so now you'll see. Tesla, very dangerous. What happened there? You had a reversal here, broken name, and then got downgraded and boom, engulfed it. So if you had a little left over from yesterday's trade, once it really broke 190, that was your out. In my note, I said, see if you could, be buyable at 190, but if not, you better be careful. Actually, this isn't even 190, this is below it. 190 was right around here. Figuring that if it was any good and wants to go green, it's going to hold a little bit higher. Not only did it not, it broke lower. So it's still broken below every moving average, and, again, love them and leave them. Unfortunately, that's the way all these stocks look like. They all look broken. They all look like you can get a one-day bounce, sometimes 1 or 2 day bounces, or like we saw off the lows a little bit more, and then they continue down. And that's what happens in bear market type activity. In the morning call, we talked about how, is this micro tactical long from the lows over as it meets the intermediate macro broken environment. And at this point, I think there's more evidence saying it is. So we'll see how we open tomorrow. I have jury duty tomorrow, actually, so I will not be doing the morning call, but I will try and write a supplement to my morning note, and you guys will get Cooper tomorrow. And then I'll see, what we do. If you go to the spiders real quickly, I would say if the bears want to keep control here with these spiders, they probably don't let the bulls reclaim this little area, okay? And at this point, you do have somewhat of a rising channel here that could get resolved to the downside, especially since you had your breakout here, and then it failed to digest higher, and now it's hanging on by a thread. So this is the level I would be watching out here on the spiders. Besides everything else, it's already breaking down towards it. So to put it all together, take care, know your time frame, and have your levels prepared ahead of time. Have a good night.